This Friday morning, turbulence is making a comeback on Dalal Street. Investors need to brace for volatility as these down days could shake out players who assume the market will go up forever. In early action, SGX Nifty drops indicating investors need to brace for a volatile trading session. That's in line with our call of the day, which reminds us of a bumpy plane ride and, most importantly, flying, at the best of times, especially after Nifty's 3 days of straight gains, can be a stressful experience. Blame it to the turbulence on the backdrop of a chorus of inflation in the US. Inflation still remains laser-focused on signs that decades-high US inflation. Strictly speaking, uncertainty prevails as investors are worried and looking for signs if the decades-high US inflation is cooling or not. Sticky US CPI data and surging January retail sales numbers are definitely bad news for the Fed and also for stock markets across the globe. Bottom line, risk remains that the Federal Reserve may have to do more to ease price pressures. Global cues are negative. In yesterday's trade, FIIs bought shares to the tune of Rs 1,571 while DIIs too bought worth Rs 1,577 crores. F&O options data suggests Nifty's range of 17,500 to 18,500 zone. India VIX is sluggish at 12.90 levels. Nifty PCR is at 0.91. Bank Nifty PCR is at 0.67. Nifty's outlook for the day, volatile and choppy. Market breadth for the day is likely to be positive. Sentiment is precarious. Nifty's technicals are suggesting desired consolidation. Nifty CMP 18,035. Nifty support at 17,877 mark. Biggest Nifty hurdles now only at 18,307 mark. Nifty's range for the day is seen between 17,850 to 18,150 zone. Bias for the day, neutral. Bank Nifty, CMP 41,631. Bank Nifty support seen at 41,000 levels. Major resistance at 42,313. Bank Nifty range for the day at 41,000 to 42,000 zone. Bias for the day, neutral. In yesterday's trade, Nifty ended higher for third straight day, but the negative takeaway was that the benchmark retreated towards close. That said, better market prevailed for IT and defense stocks. Bank Nifty's rally, however, was seen pausing. In today's trade, investors will prefer to stay on the sidelines after the US 2-year yield jumped to 4.634%, while the 10-year yield was last pegged at 3.83%. Most importantly, the US dollar index topped 104 levels for the first time since early January, as robust economic data threw some cold water on expectations for the ending of the Fed's tightening campaign. The only positive catalyst this Friday morning, FIIs have been buyers for past 5 trading sessions to the tune of 6,088 crores rupees. Technically speaking, the line in the sand is at Nifty's support at 17,877 mark. The Gyan mantra is to be cautiously optimistic.